So there's been a lot of buzz lately about the proposed 50-year mortgage. What are we thinking? Some people are calling it a solution for affordability, while others say it creates more problems than it solves. But what do you think? What do I think? Good question. Today, I'm breaking down what a 50-year mortgage actually is, why it's being considered, and the real pros and cons you should know as a buyer, future homeowner, or investor. What is a 50-year mortgage? Right now, most U.S. mortgages are 30-year, 20-year, and the 15-year term is the faster payoff option. A proposed 50-year mortgage would stretch out repayments over half a century. But why? What's the goal behind it? To reduce monthly payments and make housing more accessible in high-cost markets. Extending a loan that long comes with trade-offs. Let's jump into the pros of a 50-year mortgage. You're going to lower the monthly payment by spreading the loan over 30 years. By doing this, the monthly cost drops, and this could help first-time buyers or households dealing with high interest rates. Another pro, help with home affordability in expensive areas. In places where prices are climbing faster than wages, and I'm looking at you, Phoenix Metro, LA, and Seattle suburbs, the longer-term mortgages could allow buyers to enter the market who otherwise couldn't qualify. Another pro is flexibility for investors. Investors who are focused on cash flow. A lower monthly payment can make rental numbers work. But also, we need to look at the cons of a 50-year mortgage. The big one is you will pay significantly more in total interest. And this is the biggest drawback, is the cost over time. Stretching a loan out 50 years racks up interest far behind what you pay on a 30-year. Another con is it's going to take you longer to build equity. In the early years of a loan, nearly all of your payment goes towards interest. That means your equity grows at a crawl, and selling early could leave you with very little gain. Now, y'all know I kind of like math, and I like to bring y'all facts. So let's look at this on a quick mortgage amortization calculator. You can Google it and you can do this yourself, but I'm going to show you the difference between a 30-year and a 50-year. Just some quick numbers. Now, the average price here in the Valley, October 2025, is $350,000. So what happens after 10 years on a 30-year mortgage? What would you have paid? After 10 years on a 30-year mortgage, your loan balance is $293,000. You have approximately $57,000 in home equity. But what does that look like with a 50-year mortgage? After 10 years on a 50-year mortgage, your loan balance is $335,000. You have approximately $15,000 in home equity. So in the same amount of time, the difference is between $57,000 and $15,000. But keep in mind, your payments were different as well. The difference between the two options is $42,000. That's a pretty big difference. The 50-year is definitely a better return than renting, in my opinion. If you feel stuck in a renting situation, this could help with that. One question I have is, would buyers now qualify for larger mortgages? And how would that affect interest rates? Okay, so there's still a lot of things that we don't know. Okay, so in addition to renters, who else might benefit and who should be cautious? If this mortgage does become available, it might appeal to potential home buyers struggling with monthly debt-to-income ratios. I'm thinking buyers with higher student loan debt and car payments, okay? As well as investors who are focused strictly on monthly cash flow and they're not looking at the long term. But those who should be cautious would include anyone hoping to build equity quickly, because again, there was a big difference between the 30-year and the 50-year. And also, if you're a buyer who wants to move in maybe 5 to 10 years, I would not think a 50-year mortgage would do it because you're not going to be getting as much equity as you would with a 30-year. Okay? 50 years is a lot of time, but this type of mortgage could reshape the way people buy homes here in America. But it's not magic, okay? It's not going to be a magical solution. It lowers the monthly payment and it gets home buyers into home ownership. Just keep in mind, it also extends your debt by 20 years, which slows your equity in the home. If this proposal moves forward, the most important thing is understanding what you're comfortable trading for a lower monthly payment. Definitely let me know in the comments if you think it would help or hurt. Because you know, inventory is already tight. If we had a 50-year mortgage, more people might qualify. It might get crazy out here, but who knows? My name is Tiffany Nelson. I'm a realtor here in the Lehigh Valley, the greater Allentown area. If you or someone you know needs a realtor, I would love to hear from you. Want to learn more about the mortgage pre-approval process? Watch my video on that next. If this always the shenanigans. Okay.